Welcome everyone, I'm Ted Earhart. We're going to do hopefully a brief video today on one of my favorite topics, a topic that I just really find interesting, and that is mortgage rates. And just to be clear, I'm not in the mortgage business. I really come at this from a consumer's perspective. I'm just the kind of guy who's always looking to find or to capture the best interest rate possible if an opportunity presents itself. I'm also a personal finance professional, so that goes along with this as well. But I did several videos on mortgage rates last year because we saw rates dip to all-time lows. And in fact, mortgage rates touched, I think most people thought the all-time lows were in around, I think it was the December or January timeframe of 2020 going into 2021. And then interest rates broadly started moving up. And that was really the consensus view on Wall Street, that as the economy healed, that interest rates would be rising and naturally mortgage rates would follow. But to everybody's surprise, in the second quarter, I think actually in late Q1, we started to see interest rates start to fall. And we can see that graphed on this bottom tan line, which is the 10-year Treasury. So we can see interest rates rising and then all of a sudden surprisingly falling in most recent months. This has presented an extremely interesting opportunity in the mortgage market. Now, I think, and I want to bring this up because I think some people might have felt like they missed out on refinancing over the last year or so. Right now, rates look really attractive on both an absolute and a relative basis. So that's really what I'm trying to bring to people's attention here. So most recent data by Freddie Mac, Fannie Mae, his mortgage rates on the 30-year are averaging about 2.8%, which is near the all-time lows hit again in late 2020, early 2021. I can't remember the precise month. But nonetheless, we're kind of right back in that same range. So rates on an absolute basis are very low, and they're also very low on a relative basis. Again, I did a video on this last year. There is this key interest rate relationship between the 10-year U.S. government bond, which is graphed in this tan line, and mortgage rates. There's some reasons for that. I don't want to go into those today just to try to keep this brief, but we can graph this so-called spread, which is the difference between the two, to gauge whether or not mortgages are attractive on a relative basis. And basically, here's all you need to know. The 20-year average, this spread, or the difference between these two rates, is about 1.8%, roughly speaking. That spread has narrowed. And right now, most recently, it's about 1.5%. It was even tighter earlier this year when interest rates broadly started moving up. But my point is, I have a tendency to ramble, so let me cut to the chase. My point is, right now, mortgage rates look very attractive on both an absolute basis and a relative basis based on this spread, this key interest rate relationship. So that means if you haven't looked at refinancing over the last 18 months or so, right now looks like a very opportune time to do so. So you might want to give your mortgage person a call. Anyway, that's all I have for you today. As always, thanks for tuning in, and we will see you next time.